Welcome to This Week in Money. I'm Jim Goddard. Today, Ross Clark from chartsandmarkets.com runs down the major markets. He says big highs were hit on Thursday. He checks out gold, crude, the U.S. and Canadian dollars. Author of several books on the economy, including The Money Bubble, John Rubino joins us to chat about the job Donald Trump has been doing as president, gold, silver, lithium, and the BRICS meeting that's coming up. Publisher of thetrendletter.com, Martin Straith, questions U.S. job growth numbers and comments on stock market trends, the greed factor, the U.S. and Canadian dollars, and new options in the cryptocurrency space. Editor of the Hat Trick Letter, Jim Willie, gives us his take on how the Russia-Ukraine and Israel-Iran conflicts will affect the markets, the possibility of interest rate cuts, and what's happening with gold and silver. We'll talk to Ross Clark right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark from chartsandmarkets.com, where you'll find timely technical analysis and insightful market commentary. You can find him on X at Charts by Ross. Welcome back to This Week in Money.
Pleasure to be with you, Jim.
How would you describe what happened on our holiday-shortened trading week?
Yeah, it's like if you don't like a holiday in the middle of the week, have one at the end of the week. It'll give you both opportunities. So all-time highs with big gaps up on the NASDAQ and on the S&P on Thursday on their last day of trading for the week. So the S&P is now up around 6280. I've got some pretty significant resistance levels up at 6350. When we turned the corner from that April low, the initial reaction that I was looking for was up to a 62% retracement rally. We had that by the end of April, and then it started to punch through. So the probability was at that point that we would go up, test the all-time highs, and I had a Bollinger Band that was much higher, up at this case now at 6350. And it looks as though that's what we could be in the cards to go up and test. Now, on the modeling that I've got here, if we, at this point, were to back off and then stage another rally back to equal or higher highs, and with a divergence in the relative strength index, that would be the makings for an initial top-up here. When the key will be is to say, set up the divergence and then come back down and break the 20-day moving average and eventually the 50 days. So those are the numbers that we're going to be looking at. The S&P support down around 6,100 right now. So pullbacks that hold at that level are still within the uptrend. And we want to see how it does as the market pushes up against the all-time highs. Now, the credit markets, if we take a look at what's going on in terms of the high yield or the CCC or the FRED, the option-adjusted spreads for credit markets there from the Federal Reserve, or the global M2 moving to all-time highs, all those items are still bullish for this move. They turned bullish right in the second week of April. So the credit side of the equation is still supportive to the market up here. We'll be watching to see if they start to show any signs of being tiring. But in the meantime, the market itself, you want to be looking for potential double top around this high that we've just done now, with a retest maybe in the second half of this month. And if that test doesn't hold, then we can start to talk about a much deeper correction.
What's going on with gold and silver?
Okay, so the gold market topped right with the bottom in the U.S. dollar this third week in April, and was expected to correct back to the 20 and then the 50-day moving averages. We had the bounce off the 20-day, bounce off the 50-day, and now what we've seen is just a trading range here. We've been the better part now of month and a half, and that was the norm that you would expect after such an explosive high that was put in at the top. Now, what we have to watch carefully here right now on the at least intermediate term is that the dollar index has been down dramatically this year, down from 110 down to into the mid 90s. And that in the last week now, we've got both daily and weekly signals that are setting up for an interim low for the dollar index. What we'll be watching is the first week now with a higher high in the dollar index would suggest that we're going to rally back to the 20-week moving average. And we're at 97 right now on the dollar index. The moving average is up around 100, so we could see a decent rally there. Now, part and parcel with that is that when we've had this type of a bottoming signal in the dollar index, and we go back now for 50 years, there's 25 examples that are like this one. And when you relate them to what happened in the gold market, you generally will see an interim high in gold, and we've had a really good bounce this last 3 or 4 days. And then you'll go back down to retest support levels, if not below them. So at this point, if the dollar index continues up in the next week or two, that could set the stage for a decent correction in gold. That would be against the seasonals. I mean, the seasonal here in gold is that July and August are pretty darn good. So, that's the positive bias to things. The negative here is the performance of the dollar index. So we'll watch the dollar index as a real key in terms of what to look for. Now, other precious metals, silver, platinum, palladium, have all been doing well and actually been doing better than the gold market. The platinum that we talked about in the last couple of weeks had its breakout of a long-term consolidation. Typically, when you have those, you only correct back about 23%. That's a Fibonacci ratio. So you correct back about 23% of the move. That has happened about 7 or 8 days ago, and we moved up to new highs again. Platinum's going now through a bit of a consolidation the last few days, but the overall pattern is really bullish here for platinum. Now palladium is starting to kick in. So good. It's good to see those. Silver is just biding its time. I still think that a year from now you could be looking at considerably higher levels than this. The 5-year cycle there has bottomed, and next year would be the optimum year for a high.
What's going on with crude?
Crude, just in a consolidation phase in here. Seasonality would push, say that we have the opportunity for a better bounce. I mean, clearly, the Iran Israel situation caused that big bump up when the Americans got involved. We got up to 77.5 to 80 on the rally and gave all of that back in 24 hours. So here we sit around 66.5. I wouldn't be at all surprised that he pushed towards 70. My understanding is that OPEC wants to have another meeting about changing the quotas, so that actually can put a bit of an overhang on things.
What's going on with the U.S. and Canadian dollars?
Well, as I say, the U.S. dollar is trying to bottom out in here, good signals, and that could be setting up for a decent rally. The Canadian dollar has been holding in exceptionally well. Relative to the U.S., we backed off to about 72.5 a couple of weeks ago, and we're back retesting the high at this point. That low that we put in at 72.5 is a pretty critical support level, both on when we look at the daily and at the weekly chart. So the trend is up, and it's now starting to outpace both the CRB and the crude oil market. So that's a positive underlying bias in the Canadian.
Ross, thank you so much for the update.
Good to be with you, Jim.
My guest has been Ross Clark from chartsandmarkets.com. Find him on X at Charts by Ross. Coming up, John Rubino next on This Week in Money.
Always consult your investment professional before making any investment decision. This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. My guest is John Rubino, author of several books on the economy, including The Money Bubble. He founded the website dollarcollapse.com. You can find him on Substack at Rubino.Substack.com. Welcome back to This Week in Money.
Hey, Jim.
President Trump's been in office for over 5 months now. Is he doing a good job?
There are no one-word answers that apply to Trump. He's doing so many things, and some of them are great. Some of them are incredibly annoying. Some of them are scary. So I wouldn't even know how to break it down to a grade, A, B, and C. He's just got so much stuff going on. But I'll say things I like. One is he stepped right in and closed the border, which we really needed to do, and which prevents us from committing cultural suicide like Europe is doing right now. 4 more years of the previous administration, and we would be Germany or the UK or someplace like that that's just swamped with people from incompatible cultures and breaking down in every way imaginable. So we spared ourselves from that, and it gives us a chance to devise a coherent immigration policy going forward instead of one that's just chaotic. At the other end of the spectrum, he campaigned as a peace president, and we've been shooting and bombing everybody in sight, it feels like. The idea of the U.S. Being controlled by Israel used to be this weird conspiracy theory, and now it's apparently true. So that's the bad part of it. And, in between there's a lot of interesting stuff. So it's been entertaining, if nothing else.
Do you think President Trump wants to annex Canada?
No, I think he's a troll who loves to needle people for the fun of it. Same thing with Greenland. He's a real estate guy. He looks around at these very valuable pieces of real estate, and his impulse is to acquire them. So he's just doing it on a bigger scale right now. But no, I don't think, or let's put it this way, I think his people would explain to him that annexing Canada would be a very bad idea for the U.S. because, as a people, Jim, you guys are too liberal for the United States, or for a Republican government in the United States to want to affiliate. What the U.S. would really like under Trump is all that oil. So what's the province with all the oil?
Alberta.
I think Trump would snap up Alberta in a heartbeat if that was possible, but he wouldn't want all of Canada because that would be like taking another California and putting it into the U.S. electoral system, which would be really bad for Republicans. So, short answer, no, he's not serious about annexing Canada.
And Canadians would insist on government health care.
Oh, totally. You guys would vote like Californians. Which no Republican in their right mind would want to facilitate. So, it's better for us to be good neighbors than it would be to try to join together in a new family.
Canada does have rare earths as well in Saskatchewan and Quebec.
Well, I think the ultimate end of the process is for North America to be, a kind of an economic community where Canadian natural resources and U.S. capital markets and technology and Mexican labor force all work together to create an extremely successful economic coalition. And yeah, rare earths are a crucial part of that vision, and Canada has a bunch. So, you guys, in terms of natural resources, are probably the richest per capita people in the world. And it's just a question of converting those natural resources into wealth in a responsible way. So far, I don't know. I think that right now you're kind of impoverishing yourselves by not exploiting your resources to the extent that they could be exploited and still, have it be done in a responsible way. So I think that Canada at some point is going to recognize that it's an extraction, it's a resource-based economy, and really take advantage of that.
Well, Parliament did pass their quick development law where instead of taking 10 years to get a major project out the door, now the max is going to be 2 years.
Yeah, see, that's the right kind of progress there, because 2 years is plenty long enough to decide whether something is viable or not.
The commodities bull market is becoming more broad-based, with silver and platinum joining gold. Why is this happening, and will it continue?
Well, why it's happening is that, it's becoming clear, I think, that, two things are becoming clear. One is that no big country is controlling their budget anymore. So we're headed for a massive currency reset out there when the dollar and the euro and the yen just start losing value in a disorderly way. And that's good for real stuff. So people are recognizing that, and that's making commodities more interesting. Second, actually, there's three things here. Second is that commodities are just very cheap compared to, for instance, tech stocks. So value investors are suddenly taking a look. And the third thing is that so many commodities right now have phenomenal individual stories. They haven't been getting the kind of attention that they deserve because everybody's been focusing on gold. But, silver is just an amazing story. It's an industrial metal that is in deficit right now. We're not producing enough silver to satisfy the world's desire for electric cars and missiles and solar panels. So silver will go up just for that reason, if nothing else. But it's also a monetary metal that's connected to gold. There's a gold-silver ratio that people pay attention to. So gold going up pulls silver up. Copper is absolutely crucial for next-generation energy development. In other words, all those data centers that are going up for AI require massive amounts of new electricity, and that requires copper. So copper is near an all-time high right now. Uranium has sort of the same story. It's really rocking because we're building nuclear plants all over the place. So I think a lot of what's happening now with the broadening of the commodities bull market is just that people are recognizing that each individual commodity has a very compelling story to tell. So we should be diversifying from just gold into all the other things that have similar stories. And we're seeing it happen now.
How much higher can gold go from here?
Well, if you're going to back the world's major currencies at something like a 40% level, which was common back in the days of the classical gold standard, then you need a gold price that makes the gold stocks valuable enough to match 40% of the world's fiat currencies. And to get there, you need a much higher gold price. I mean, 10,000 is the minimum that anybody even contemplates for that kind of a plan. And, you see people saying 40,000. And I wouldn't necessarily still be holding gold at the point that it hits 40,000. But I think you don't necessarily want to bail at 10,000. So somewhere in that range, 10 to 40,000 is your exit point. And I don't really know where it is right now, but I certainly don't think it's $4,000 in it.
Is $50 silver likely this year?
It's possible this year. Likely is maybe because we're halfway through the year, so maybe that's a little too strong. But the way things move now, look at what happened with platinum just lately. It just went straight up, for like 2 weeks, and now it's at a multi-year high. Silver could do something like that very easily. If there's, a disruption on the COMEX where the exchange can't come up with enough silver to cover the delivery demands of future contract holders, well, that could spike silver in a heartbeat. So whether it happens that way this year or 3 years from now, I wouldn't want to speculate, but I think silver is definitely a strong buy at today's price. And if you're already kind of well invested in silver, it's definitely a hold here, Same thing with, as with gold. This is not a time to be bailing on silver, even if there's a correction between here and $150 an ounce, which there could easily be. You don't want to be bailing yet because you don't want to miss that big move that everybody's been waiting for a decade and a half to happen, So we have to be in now, because being out of it, trying to time these markets by going in and out, risks missing that big move and then making the whole previous 10 years kind of pointless, right? So we're in it to win it now.
What's going on with the gold audit of Fort Knox? Nothing,
as far as I know. It's kind of like, it's in the dark room where they lock the Epstein files, They promise something, it sounds great, gets everybody excited, and then it doesn't happen. And it may not be for the same reason that the Epstein files aren't being released, which is that it turns out it was actually a Mossad CIA honeypot in order to incriminate a lot of billionaires in order to be able to control them. That's a hard thing to release into the ecosystem. What were we talking about? Sorry. Oh, Fort Knox. I'm sorry, Fort Knox. With Fort Knox, it's possible that they took an early look at it and found out the gold wasn't there. And they're worried about what that would do to the dollar if they do go audit Fort Knox. See, an audit of Fort Knox is only a good thing if it's all there. If you go there and it's either not there or it's encumbered by futures deals or whatever, then that's really bad for the currency that gold is supposed to be backing. So maybe they took a look at that and thought, oh my God, we can't just pull the trigger on something like that. So I think that's a possibility too.
Is there a focus on rare earths now?
There has to be. I mean, I'm not paying a huge amount of attention to them, but they're crucial for a modern military, among other things. So the people in charge of U.S. procurement are paying a lot of attention to this, and they're trying to hatch a plan that allows them to have safe rare earth resources that are available to them. And as you said, Canada has some. China has the most. So there's kind of a mutually assured destruction thing going on with the U.S. and China. We could sanction a lot of their trade and just bankrupt them because they rely on trade. But they could cut us off from a kind of natural resource that we really depend on and that our military would kind of grind to a halt without. So I think neither the U.S. nor China wants to take the whole trade war thing to the next level. And I hope they're trying to cut a reasonable deal because an actual full-on trade war would be in nobody's interest.
Does it look like lithium and the battery metals could have put in a bottom?
Well, the battery metals, besides lithium, I'm not sure about. But I think lithium is at extreme risk right now to the new solid-state batteries that are coming along. There are several car companies that are out there actually testing vehicles using these next-generation solid-state batteries that I guess don't use lithium. But they charge faster. They are able to charge to much higher levels. In other words, you can get 1,200 miles out of a charge on these cars. So these people are saying. So once they get the price down to a competitive level, they will probably take over, and that's bad for lithium. I don't know what the time frame of that is going to be, but if I was a lithium investor, I would be worried about the next breakthrough announcement in solid-state batteries, which might be, oh, look, we can do this at a competitive price. So from now on, all our cars are going to use these batteries. Something like that is liable to be announced at some point in the next few years. So that makes lithium more risky than I'd be comfortable with.
U.S. stocks have been hitting new all-time highs. We heard a prediction of 65,000 for the Dow. What are your thoughts on that?
I think U.S. stocks are wildly overvalued. If you look at, for instance, the Buffett indicator, which is the market cap of all equities compared to GDP, that's usually something that reaches a certain level and then there's a big stock market crash. Well, we're way beyond that level right now. So by that measure, equity market cap to country GDP, U.S. stocks are wildly overvalued. And every time we've gotten anywhere near this in the past, there's been a big crash. So that makes me nervous about U.S. stocks. Now, at the same time, the world is really chaotic. And in times of chaos, the U.S., even with our horrendous finances and our idiotic foreign policy, we're still safer than China or Russia or Brazil or big parts of Europe. So capital still flows into the U.S. In times that are chaotic, even if the U.S. is causing the chaos. And that's part of what has elevated U.S. equity valuations in the last few years. And there's no reason why that can't continue if capital flows continue. So you've got wildly overvalued stocks that are still seen as a safe haven asset by a big part of the world. Okay, the way we should respond to that is to definitely have some shorts on hand. In other words, buy some put options on the S&P 500 and the NASDAQ in case of that big crash. But don't just do a big short scenario where you bet the farm on U.S. stocks crashing because you've got this other thing, these capital flows out there, that might, in the short run at least, be more important than equity valuations. So, I have some bets that the U.S. is going to crash, but not anything like the kind of short bets I had back in 2007 when the housing bust was obvious. It was definitely coming and you want to short that market and everything related to it. Nothing like that. But I think you should definitely have some shorts in the form of a small bet against the U.S. stock market.
Do you think President Trump wants to end the Fed?
I've never heard him express an opinion about that. I think he's got people around him who would like to end the Fed. I think it's conceivable. He's got some gold bugs in his crew, and it's conceivable that they talk him into a new gold standard or something like that, which would be effectively ending the Fed in its current form, because it would be putting a hard limit on money creation. So from that perspective, we could change the Fed in such a way that it's the next best thing to ending it, I think pretty easily. But actually ending it. Oh, and one other thing that happened with the whole end the Fed thing was the proponents of that, the Ron Paul libertarians and Rand Paul and some of the guys in Congress who are libertarian enough to vote against Trump's big, beautiful spending bill just now, have really antagonized him. So if there was any chance of him listening to them about ending the Fed in the past, there's not now. He's trying to kick them out of, like Thomas Massey, for instance. He's trying to primary Thomas Massey, who is normally a huge ally of a Republican president. I mean, he's a libertarian, which is mostly compatible with mainstream Republican thought, and certainly with right-wing populism. But he didn't want to vote for a wildly unbalanced budget, and so he voted against it, and now Trump is trying to primary him. So, those guys telling him, let's end the Fed, are kind of probably going to be met with deaf ears now because Trump is so mad at them.
Some central banks have started cutting interest rates. Will the Fed join them?
Central banks are cutting interest rates, and the Swiss central bank went all the way down to zero just lately. So we're back to, at least on a small scale, ZIRP, and it won't be long before we're heading into NIRP, negative interest rate territory. So, yeah, I think the Fed has to cut at some point, or dramatically cut when there's like an equities bear market or something like that. But, we just had a really strong jobs report this morning, and that argues against lowering interest rates, because if you've got massive amounts of new jobs being created out there and wages going up. That's inflationary. That's wage price inflation. And that's something the Fed usually leans against with higher interest rates. So we'll have to see how it goes. In other words, what big macro thing is going to change going forward? Because we could have a recession that is either caused by or causes an equities bear market and all the financial instability that implies. And that would spook the Fed into cutting. But if we're just going to have a strong jobs market and rising wage inflation, that's tough to justify cutting. And then meanwhile, you've got President Trump screaming at them to normally you don't see presidents going on social media calling Fed chairman names, but that's what's happening in the U.S. right now. Trump is literally calling the chairman of the Fed unkind names right now on social media. And the Fed can respond to that in one of two ways. Either just ignore him and do what they want, or actually three ways: capitulate and do what he wants, or do the opposite of what he wants just to spite him. So you've got three different possibilities there, and we'll just have to see what the Fed chairman and the Fed governors decide.
The U.S. is passing a massive new spending bill. Does this guarantee rising deficits for the next few years?
Yes, but there always was the guarantee of rising deficits for the next few years because there's no way to cut entitlements, especially when baby boomers, the biggest, most politically influential generation in the existence of America, does not want their benefits cut. So as boomers retire and go on Social Security and Medicare, that requires massive amounts of new spending, and there's no way to get around that. So we were always going to head for rising deficits from here. But now Trump, and the spending plan hasn't passed yet, but it's a lot of tax cuts and a lot of increased spending and very few spending cuts. So unless those tax cuts generate massive new growth, which that's a whole other argument, but unless that happens, deficits will be even bigger going forward than they would have been if we'd just been on autopilot. So the U.S. is already running deficits of 3 or 4% of GDP, and it's already got interest cost on that debt of $1.5 trillion a year and rising. So we're in the death spiral part of the process now, where we're borrowing to cover our interest expense. That's what you do as an individual. You go bankrupt within a few years. And when a government does it, their currency collapses. So we're there. That's already getting ready to happen. And there doesn't really seem to be any fix for that. The least pain-free way of getting out of this would be to go to a new gold standard, do a currency reset, where we devalue the dollar massively and then go back on the gold standard. But that impoverishes everybody who trusted the government up until the point of the reset, because their bank accounts and their bond funds and their cash under the mattress all are devalued really dramatically. And, it's not clear whether the guys who do that can survive politically doing it. So you have to think twice before you just spring something like a new currency reset involving a massive devaluation on a populace. But that's the least painful choice. Everything else involves chaos. So hopefully they bite the bullet, they do the smart thing, even at their own political expense, and then we go forward with a sustainable monetary system based on gold.
Do you think President Trump has a plan to deal with the massive government debt?
No, I don't think he cares. And so I think that he's going to do a lot of good things. And he's going to bring manufacturing back to the U.S., and he's going to probably create a sustainable immigration system. But the whole debt thing is unfixable. The only way, like I said, the only way to fix it is to devalue the currency to the point where the debt's not onerous anymore. Maybe Trump will do that, but he hasn't expressed an intention to enact a plan like that. So no, I don't think he has that plan in place. I think that he might end up doing it, but I think it'll be something that gets hashed out in the crisis moment when things really seem to be spinning out of control. So it's not a plan, although it might actually happen.
The BRICS countries are meeting next week. What should we expect?
Well, they're kind of inching towards that gold-backed currency, and de-dollarization is something that's a word they're using a lot in their deliberations. So we'll see. They've kind of fooled us the last couple of times where they raised expectations and then didn't end up doing anything really dramatic. But they have been inching towards something like a new trading currency backed by gold, because they've been buying a lot of gold in the interim. You know, every year, the world central banks, mostly BRICS countries, buy about another 1,000 tons of gold. And that's a lot of gold. And each year that happens, they come out of it stronger in terms of their ability to back their currencies with something real. So we'll see. And you know, also, the whole Middle East thing is very scary to a lot of these guys in the BRICS, because if we're going to bomb Iran, why can't we invade Saudi Arabia and take their oil? Or why can't we start yet another proxy war somewhere? Because they don't think we're predictable, and that makes them nervous, and it gives them even more incentive to de-dollarize. So I think each BRICS meeting brings us closer to the point where something really dramatic happens.
What's the latest on real estate?
You know, U.S. real estate is, or at least housing, is in a bubble in terms of price. It's never been less affordable for the average American than it is right now. So in that sense, we're in this big, dramatic real estate bubble, but it's been so slow. And all that's happened is that house prices go up a little bit each year. And, there's no massive number of deals being done out there, and no kinds of new, quote unquote, innovations being tried by individuals to play the housing bubble or stuff like that. It's just ridiculously high prices. And I think that very possibly could lead to a housing crash or a price crash. It wouldn't necessarily be anything that bankrupts millions of people. It would just be that prices of houses have to go way down in order to sell. So next 2 or 3 years, we could see 40% drop in U.S. home prices. Now, the dangerous part of the real estate market is commercial real estate, where especially office buildings, and you and I have talked about this before, so your listeners probably know the story of office buildings, but suffice it to say that a lot of them are not worth anything like the debt that it took to build them or refinance them. So somebody's going to have to eat those losses, and it could be local and regional banks in the U.S., which could trigger a banking crisis. So you want to see the government to do something dramatic, let a bunch of local and regional banks start failing, and you'll see a monster bailout or massive interest rate cuts or something like that. So that could be the catalyst for the next crisis, in other words.
Where can our listeners follow you?
I'm at Rubino.Substack.com, and I publish a newsletter there that covers actionable advice for all the stuff we just talked about.
John, thank you so much for being on This Week in Money.
Thanks, Jim. See ya.
My guest has been John Rubino. Find him on Substack at Rubino.Substack.com. Coming up, Martin Straith, next on This Week in Money.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back. My guest is Martin Straith, founder of Trend News online at thetrendletter.com. He's speaking to us from Coquitlam, British Columbia, which is just east of Vancouver. Welcome back to This Week in Money.
Oh, good to be here, Jim. Thanks for having me.
U.S. non-farm payroll data came out on Thursday. It was better than expected, with 147,000 jobs created instead of around 100,000. Also, the unemployment rate in the U.S. dropped to 4.1% from 4.3%. What does that mean for the Fed and rate cuts?
Well, first of all, I have zero faith in these numbers. I mean, the numbers that they post and that you just quoted, that's from the Bureau of, Labor Statistics, I think it is. And it's based on a survey. It's not based on any actual data. It's not based on payrolls, for example. But on the surface, the markets react, and you would think that would be a positive for the U.S. economy, 147,000 jobs versus 100 or so. But when you drill down a little bit, very quickly, you see what's really going on there. And of those jobs, the state and local governments were the big increases there. So of the 147,000 new jobs, 73,000, so almost half, were government jobs. So then if we look at, what happened in the private sector, well, according to the ADP report on Wednesday, so the day before, and that report is actual payroll data. So that's real, that's real data. Well, the private sector lost 33,000 jobs in June, and that was the first monthly decline since I think it was March 2023. So, and the expectation for the private sector was an increase of 95 to 100,000. So that 33,000 job loss, that was a big miss. And you got to remember that, private sector jobs are considered much more important to the overall economy than government jobs because they're the main engine of economic growth, innovation, sustainable job creation. So I think what's happening, is with all the uncertainty with the tariffs, the private sector's holding off new hires until they get some sense of, what's the impact of the tariffs going to be. So we have to remember also that this job data, it gets revised later in the month, and it's almost always revised lower. So now, how do these relate to the Fed and rate cuts? Well, I would assume that 147,000 new jobs, that's pretty much taking a rate cut off the table for July for sure. I think if the private sector jobs keep declining though, and that we start to, I think that will start to spook the Fed. And if inflation starts dropping, then I think we're going to see a rate cut, much more likely. Just checking here real quick. Just checking the CME FedWatch tool. So according to that, there's only a 4.7% chance of a rate cut at the Fed's July 30th meeting. But for their September 17th meeting, there's a 67% chance of a 25-point cut. So prior to the jobs data coming out this week, the markets had projected 3 Fed cuts this year, and now they're only expecting 2. Bottom line is, I think the Fed is watching the economic data for sure, but I think they're also watching the stock market. My thought is, if Powell sees the S&P 500 say down 1,000 points in September, I think he'll cut. But if they see the S&P 500 up 1,000 points in September, I doubt they would do any cut.
President Trump has said he'll announce a new Fed chair prior to Jerome Powell's term running out. What will that mean for the economy and markets?
Yeah. This has been an ongoing barrage of Trump beating on Powell. Yeah, he wants them to drop rates, and he doesn't want them to drop it a little. He wants to drop the rates all the way down to 1%. You think about it, the U.S. 10-year rate now is, it's about 4.3, 4.4%. That would be a huge drop. And yeah, he said he wants to announce a new chair in a month or so, well before Powell gets in. So that's gonna sort of spike the markets, I think. So this person though is now going to be Trump's puppet, and the Fed chair would be answering to the president. You think about that. That's how third world countries operate. I think it means we're going to see a lot of speculation, expectations of cheap, free money. This could be one of those buy the rumor, sell the news events. People were going to start front running the news, which I think may explain what part of the current rally is all about. The U.S. stock market is already at record levels. The stock market capitalization, it's 2 times the U.S. GDP. That's the highest, stock market capitalization ratio to GDP in the world. So if Trump controls the Fed policies, it'll probably work. Certainly it'll spike the market short term. But as I said, this is how third world countries operate. And once things start to fall apart, I don't think you would want to be invested in that kind of an environment. So I think, if Trump ends up controlling the Fed, I think it's going to crash and trash the currency. I think it's going to be inflationary. And I think that would be very good for gold. The problem is, to me, is that Trump's, he's 70, 78 years old. He's only going to be president for another 3.5 years or so. And he's not worried about the long-term effects. I think the only thing he cares about is the stock market. And if eventually he forces the rates to go too low, you're going to see inflation skyrocket. And then he's going to have to change his tune. But by that time, it's probably going to be too late. I really think having the Fed chair that is basically Trump's puppet is a very dangerous thing.
You use technical analysis, and you highlighted that there's a strong convergence approaching for the S&P 500. Can you explain it?
Yeah, there's a very interesting trend line. We looked at this quite a while ago, but it's quite an amazing one. So it's a trend line that goes all the way back to the Great Depression high in 1930. So if you draw on a logarithmic chart, and we draw a trend line from that high in 1930 to today, it shows that trend line got tested at the .com high, but that test it failed. So it couldn't break above that line. It tested it again just back in February this year, and again, that line held. So it tested and it's solid. And now it's being tested again today. So this is a 95-year trend line that has yet to be breached. So that's a pretty powerful resistance level, certainly in our books. Now, that doesn't mean the S&P 500 cannot or will not break through that level, but we're watching it really closely, because if that trend line holds, then we should see at least a pullback very soon in the S&P 500. Now, if the S&P 500 pushes through and above and holds above that level, that would be very bullish from a technical perspective. So I think it was George Soros who said, when he sees a bubble developing, he gets in and makes it bigger. And in a bubble, the path of least resistance is up. But, bubbles always burst at some point. So if we see the S&P 500 break through this trend line, then, stay invested, but start thinking about exit strategies down the road. Now, if the S&P 500 does not break through and this trend line holds in the next week or so, then you really want to start thinking about taking some profits and or adding some hedges.
Any other interesting trends you see in the equity markets currently?
One thing we're watching is the potential of a rotation into small caps. We saw that big run up in the tech stocks, and we're watching to see if we get some selling out of those big tech stocks and some buying into things like the Russell 2000. For example, this week we saw Meta hit a double top around 740, and then it pulled back. Now, we've also seen the IWM, which is the Russell 2000 ETF. We've seen it now up 9 of the last 11 sessions. So that the small caps are starting to make a move here. Now, while the S&P 500, the NASDAQ, the Canadian TSX, they've all made new all-time highs, the small caps have really lagged behind here. So small cap stocks, they're much more sensitive to interest rates and economic conditions. With concerns like stagflation, where you end up with a slowing economy, but inflation is still high, that hurts consumer spending. But if we get lower interest rates, then that's certainly going to help the smaller companies. Also, Trump's policies of cutting red tape, that's also going to help these companies. But the main reason we're watching this potential is simply based on technical analysis. These small caps ultimately need to do some catching up, which they've been doing in the last 2 weeks. So overall, the stock market rally is really focused on the, very narrow AI tech. I mean, the S&P 500, it's only like 8 or 9 stocks that have done it, and they've moved very well. But the other, 492 or so, they haven't really not done very much at all. So similar to what we saw back in February, again, it was very narrow based, very narrow breadth. And back in February, the same thing was happening, and that's just before the S&P fell over 20%. We also have, we've got July 9th. That's Trump's deadline for the trade deals. So far, we've only seen 3 agreements, and there's no real details in them. You got Vietnam, China with some rare earth, and then you got the UK. So how many more deals are going to get done in the next 5 days? And if they're not signed, does Trump just impose his declared rates again? So those are things to keep an eye on. Another thing we're looking at is how, in the last number of years, we've seen in the markets how they interpret good news as bad news and bad news as good news. We've seen where the bad economic news, the markets jump higher. And the logic of that was that, well, if the economy is doing poorly, then the Fed would come into the rescue, cut rates, pump up liquidity into the markets. And what we've seen in the last few years is when strong jobs data comes out, the stock market actually went down because they were worried that if employment was good, then the Fed wouldn't cut rates. I mean, it's a crazy mindset, but that's what it's been like for the last couple of years. And I mean, they call it, the Fed put. But yesterday, with a good jobs report, the markets actually rallied. So that's what's suggesting to me is, it appears like the animal spirits are taking over the markets now. We got momentum coming in. This is where emotions override, both in greed and fear, that leads to irrational exuberance. So you get the bubbles and then you get the panic crashes. But we're certainly more into the irrational exuberance right now. But there's a lot of things starting to tell us as contrarians, we got to keep our head on a swivel here. The CNN Fear and Greed Index, it just spiked to extreme greed. The put-call ratio is now down to levels that often signal market tops. So again, I'm not saying this can't continue, but I'm definitely saying I'm sitting up and I'm taking notice here. So over the last few years, whenever we get a correction, it's been a V-shaped correction with a very, very quick rally recovery. I'm starting to wonder if investors today are so trained that on any correction of 10, 20%, the Fed just kind of rides in, saves the day, and so you should always buy every dip. So in the back of my mind, I'm wondering if we're approaching a scenario where the markets lull everybody into a false sense that you buy every dip, but then the market continues lower, trapping those buyers. So it's one of those reasons that you want to be holding gold, certainly as a hedge. So really want to watch this next week or so. We want to see if that long trend line holds or if it's breached.
What do you see for the U.S. and Canadian dollars?
Well, the U.S. dollar, again, that's the reserve currency. And I think everybody's now aware that it's just been in a real steep decline lately. It's down over, 12% since January. I mean, that's a huge decline, especially for the reserve currency. And, when you look at currencies, it's all connected. When the U.S. dollar is going up, other currencies decline. When the U.S. dollar is declining, the other currencies rise. So in the bigger picture, due to the trade wars, etc., we've been seeing this kind of theme of sell America. And where we, got many of these very large foreign pension funds and large institutions have been selling U.S. assets and looking to support their more domestic ones. And that means, you sell those assets, you're converting those U.S. dollars from those U.S. assets, and then you convert that back into the local currency. So that whole process pushes the U.S. dollar down. And now we've got the big, beautiful bill just got passed in the U.S. Well, that's going to increase borrowing costs by another, $700 billion. And that's according to the CBO office in the U.S. So the decline in the U.S. dollar, it's front page news. Everybody's aware of it. Everybody's bearish. And the U.S. dollar is oversold here. So now that we got stronger payroll data on Thursday, so we saw the U.S. dollar have a nice bounce, but the trend is still down. But I think we're going to see a rally here. It's overbought. It's oversold. I just saw a tweet the other day saying that the U.S. dollar is going to crash 40 to 50%. I mean, when you get sentiment that crazy, you're really likely at an inflection point here. When everyone gets on one side of the boat, that boat's likely to tip over. I think we're going to, see the bit of a rally here in the U.S. dollar. Now, if you look at the Canadian, it dropped all the way down to, low 68.3, something I think it was in February. That was a 23-year low. But since then, with all the tariff news and the U.S. dollar tanking, the Canadian dollar, it was up to, 73.7 last I looked this week. So, but again, the Canadian dollar, the strength in the Canadian dollar is primarily related to the weakness in the U.S. dollar. We did have last month where the Bank of Canada kept its rate at 2.75%, while the ECB dropped theirs to 2%. So that made the Canadian bonds more attractive. But next support would be about 73. But as I say, Jim, it's all connected, heavily driven by what happens in the U.S. dollar. If we do see a rally in the U.S. dollar, we're going to see the Canadian, the euro, the yen, etc., decline.
What's your take on precious metals?
Well, a bit of a mixed bag here. Gold has been pretty dull recently. It hit that all-time high in April at 3,500, but it's been just meandering sideways for the last couple of months. And the thing that's worrisome to me with gold right now is during this time that gold's really done nothing, we've seen the U.S. dollar plunging. And if gold can't rally while the U.S. dollar's plunging, that's not a good sign for gold. Now, the U.S. dollar, like I said, the U.S. dollar decline, it's all front page news. Everybody's talking about it. But back in April, when gold hit $3,500, it got onto the cover of Barron's magazine, right? And since then, it has never been able to trade higher. The Barron's cover, it's really like the kiss of death for any sector they put on there. So since mid-May, the U.S. dollar has trended lower, and the gold has not been able to move higher. Now, if the Fed does not cut rates, that will put pressure on gold. So we could see gold drop 10-15%, I would think. And that would be a good buying opportunity. Certainly something for people to keep in mind. Now, on the bullish side for gold, again, back to Trump's big bill here that just got passed. Well, that's going to potentially add another $5 trillion to the U.S. debt. Well, and that could give gold a boost because, that just means that's going to hit the purchasing power of the U.S. dollar. And if Trump finally does get the Fed to cut rates, well, then that's going to help gold. Also, if you look at seasonality, from July to September is actually a good time for gold. It's one of its strongest periods. And of course, we've got central banks buying of gold, protecting against currency drops and global uncertainty. You've got government spending more than they earn. What government isn't piling up debt? That makes gold more appealing, safe haven play, be able to hold value, protect purchasing power. Now, gold dropped about $30 on Thursday. It closed up a little bit today. Here it's about $360 up, so it was closed about $33.46. Near-term support is $32.80. Resistance would be $34.40. Long-term, I'm very, very bullish for gold. But short-term, I'm looking for a U.S. dollar rally, and that to me would probably mean a pullback in gold. Now, if we look at silver's been making new highs, traded at 36.84 here. So that's just below its 13-year high where it hit 37. Now, if the price goes above, it can push back above 37.10. We could then just see a nice jump up to maybe $39. So again, that next resistance would be 37.10. But if we get a U.S. dollar rally like gold, I can see silver pulling back. Now in platinum, platinum's been really hot. It had a huge run up since mid-May. Set a new intraday high here on Wednesday at $14.45. Now it dropped about $50 yesterday on Thursday, up about 25 here on Friday. So, again, supply demand issues there, projected severe supply shortage for 2025. So that's a key fuel for the rise here. The World Platinum Council, they projected global supply to contract by almost 4%, which is pretty significant. And overall, again, we see broader bullish trend for the precious metals. So we're talking gold, silver, platinum, and palladium. And they're also gaining, even gold's already had the safe haven play, but these other ones are starting to get a bit of safe haven play as well as their industrial play. So you got the geopolitical tensions, the obvious ones, Ukraine, Russia, Israel, Iran, US, Iran, China, Taiwan, all of that stuff, helps gold. Precious metals, again, provide, against loss of purchasing power. Again, we talked about those massive government deficits and debts. So we're going to watch to see if we get a pullback in gold. If we do, we'll likely see pullback in silver, palladium, platinum. But again, that's pretty much driven probably a lot by what happens in the US dollar. And if we get these pullbacks, I see those as we're going to start loading up again.
What's happening in the energy sector?
Well, we saw oil actually, it's been pretty volatile here with all the action in the Middle East, but it popped again on Wednesday. So it went up to about $75, dropped to about 65 after the U.S. had bombed Iran, and then things calmed down a bit, and we had the ceasefire. But it popped on Wednesday as Iran suspended cooperating with the UN nuclear watchdog, so that's created some tension. We also saw reports that Israel was planning more bombing on Iran's nuclear sites, so that kind of pumped oil up a bit. But if it was only about supply and demand, right now oil would be much lower today. We kind of forecast it to be in the mid to low 50s. But again, the recent spikes, such as we saw in the July jump, again driven by Middle East tensions. But again, as we saw, those kind of spikes are pretty short-term catalysts. I mean, the facts are we have a declining demand in China. We've got soft economic data coming out of the U.S., Europe, and Canada. Supply is not excessive, but it is on the high side. Based on seasonality, typically June to September is a weak period for oil. Oil's been trading between 55 and 75. Again, the 75 was that quick spike to the U.S. bombing in Iran. It closed today at 66.83. If it pushes through and can hold above 67, then 70 is possible. But again, if geopolitical tensions calm, I would say we're going to drop below 60. Like I said, mid to low 50s is possible here, and especially if we see a rally in the U.S. dollar. Now, other than a geopolitical event, which of course certainly could happen, I expect oil to move lower. But near the fourth quarter, I think we're going to start to see oil ramp up and start to hit up to maybe $75, $80 range, and maybe even $90. Now, the other main one we like is uranium. Prices closed at $77.40. So it's holding most of that rally that topped out at the 7-month high at about $79, just under 80. So that's up $15 higher than the low in March and April. So now the markets are continuing to look at fund buying that will impact prices by utilities. So the Sprott Physical Uranium Trust, which we own, by the way, they said they're going to buy another $200 million worth of physical uranium. And that's twice the amount they signaled earlier. And then we've got, they got the U.S. government signaling its support for domestic uranium enrichment capacity. They're cutting regulations. They're accelerating license for reactors. So all of that's positive for uranium prices. We're seeing similar things in other countries. We saw Germany where they had shut down all their nuclear plants. Now they're looking to start them back up. So, so we see, big believers in nuclear and uranium for investors. Uranium stocks were a bit overbought here. So, we would be looking to add at any pullback.
What do you see ahead for Bitcoin? Well,
Bitcoin's done really well, with all the tariff uncertainty. It's really performed pretty well. It wasn't a very near-term slight downtrend channel, but on Thursday, it just broke through that channel. So it's just under 110,000. Now it's dropped back below it today. It's down to a couple $1,000s today. But, as we've highlighted previously, Bitcoin has been acting much more like, the NASDAQ and the tech stocks than it has like a safe haven play like gold. The $100,000 mark was key resistance for Bitcoin for quite a while, and now it's very strong support for Bitcoin. So, again, it's been acting as a risk asset. So as long as we've got this risk-on sentiment, Bitcoin should continue to do well. Now, we do expect Bitcoin to become more of a safe haven play eventually, along with gold. We've got China ramping up stimulus, which would be positive for Bitcoin. We've got the realization that, again, so many governments, so much debt, so much deficits globally, that fiat currencies are dramatically losing their purchasing power. The U.S. M2 money supply, I just saw this yesterday, it's now $22 trillion. So there's liquidity all over the place. And that, again, is going to hurt purchasing power of the currencies. And it's not just the U.S. dollar currency, it's all these currencies. And all they keep doing is they keep adding liquidity, and that just keeps eating away at the purchasing power of currencies. So that makes Bitcoin an alternative for fiat currencies, similar to gold. So for now, we see Bitcoin, we need to see it hold above 100,000. The all-time high is 112,000. Now, if the 100,000 fails to hold, next really key support would be 92.5. Now, so that's Bitcoin. Now, I want to talk to you real briefly about something I just ran across the other day. Now, other than Bitcoin, cryptocurrencies have done nothing. Ethereum, which is the second biggest crypto traded, it's been trading sideways since May. But I am looking at a chart here right now of a company that I guarantee most of your listeners have never heard of, at least certainly not until the last couple of days. The company's called Bitmine Immersion Technologies. And even though Ethereum has not moved at all, this company's chairperson, Tom Lee, he's a big crypto guy, he's saying Ethereum is the new Bitcoin. So sure. Okay. And so what he's done, they've announced that his company, Bitmine, plans to implement an Ethereum treasury strategy. So that's very similar to what MicroStrategy did with Bitcoin. They basically buy it and become a treasury for it. Now, you need to pay attention to this, though. So last Friday, so we're talking June 27th, Bitmine was trading at $4.09. It closed Thursday at $135. That's an increase of 3,300% in less than 5 days. Think about that. The stock has jumped 3,300% on the idea of buying Ethereum. And from what I've read, from what I can read, understand so far, they still do not even own any Ethereum yet. So this massive rally is totally based on the idea of pursuing an Ethereum treasury strategy. Its market cap on last Friday, on June 27th, was $25 million. Today, Jim, $810 million. It's almost $1 billion. So you think about how much money Tom Lee and his buddies have made on this little deal in the last 5 days. There's another company, Circle, that's another one that's doing a similar kind of thing. I think we're going to see a bunch more of these things popping up. And to me, that's a warning telling us that the next bubble top is fast approaching.
You have a lot of free services and some premium ones. Can you remind our listeners about all your services and how they can subscribe to them?
Oh, yeah, sure. We got 6 of them now. Okay, let's rattle them off here. We got a trend letter, so that's the initial one. That's our flagship one. So 24th year, that. It publishes every Sunday night. Its focus is for long-term investors, people who want to understand what drives the market. So that's about $600 a year. And that covers equities, currencies, precious metals, commodities, and bonds. The second one is Trend Technical Trader. So online service, updates every Monday, Wednesday, and Friday. It's both for active and long-term investors. It started out as a hedging strategy, but it now does long trades as well. It also covers equities, precious metals, commodities, and it includes our proprietary gold technical indicator. and that one sells for $650 a year. Trend disruptors is the next one. So that's for speculators with risk capital, service investment, disruptive ideas, AI, virtual, augmented reality, 5G, cloud, Internet of Things, all the cool stuff. That one sells for about $600 a year. Now we've got a new one, our DeFi Digest. Now that's free right now. So if any of you listeners want to get on that, just briefly again what that's all about. DeFi is basically leveraging a blockchain technology where it's, financial services without the traditional intermediaries like banks. So to put in some quick context here, think of it as like on the ground floor of a financial revolution, just like those who invested in Bitcoin over a decade ago. It's a peer-to-peer financial services built on blockchain technology, and that's open to anybody who has an internet connection. And there's no paperwork, no middlemen. We've got, I'm sure I mentioned this last time, the largest banks in the world, we're talking JP Morgan and BlackRock. They're projecting $15 to $30 trillion market for real world assets in the next 10 years. So, we're talking about making digital transactions on a huge range of assets, from like corporate and government debt to real estate, fine art, commodities, you name it. I think I did an example, when I was last on your show, of a tokenized, fractionalized warehouse where anybody could buy a piece of a warehouse or a racehorse or an artwork. It's an amazing concept. And so what you're looking at is, early adapters, they're going to have a really unique opportunity to capitalize on this shift, just like we saw with the rise of the internet and with Bitcoin. And as I keep warning people, there will be a learning curve, just like Bitcoin investors had to learn new technology. DeFi investors are going to need to understand digital wallets, private keys, smart contracts. But that's why we created the DeFi Digest newsletter, because it addresses these challenges. What we want to do is to educate and provide guidance to help subscribers work with their way through the process. And and we're going to be giving them ideas on where to invest. So again, it's free right now. So now the other one we've got is free is our Market Pulse. So that's another news service. It's basically just a market recap. I'm a technical person. I like charts. And I just find when I show somebody a chart and give them a brief explanation what's going on, they really can understand very quickly what's happening. So that's what we're doing. We're highlighting key market moves, some of them daily, some just weekly. But again, I think the feedback's been really good. So I think that's something we'll continue with. And then our last one is Headlines. So that's a free daily service. What we do there is we just review what's happening in the markets every morning, and we send out the headlines that we think investors need to be aware of. And these headlines, some of them, you're not going to see them in the mainstream press. These are things that we dig around and we find that we think might have an impact on the markets. And then the readers can simply read the headline, and if they want to read the more detail, they just simply click on the link and they can read the article. So if any of your listeners, they want to have any questions about our services, or if they want to get in on the Market Pulse and or the DeFi Digest, just send us an email at info@thetrendletter. So all one word, thetrendletter.com.
Martin, thank you so much for being on This Week in Money.
Oh, always a pleasure, Jim. Thanks for having me.
We've been speaking with Martin Straith, founder of Trend News online at thetrendletter.com. He was speaking to us from Coquitlam, BC. Coming up, Jim Willie, next on This Week in Money.
Always consult your investment professional before making any investment decision. This Week in Money is archived online at talkdigitalnetwork.com.
My guest is Jim Willie, editor of the Hat Trick Letter online at golden-jackass.com. Welcome to This Week in Money.
Well, it's good to be back, and I guess this is a new launch, a new form, but the same people. I wish you luck with it all, and I'm glad to be part of it.
Jim's a monthly guest with us on goldradio.fm. This month we've invited him on This Week in Money. He's speaking to us from an undisclosed location.
I'm on the planet Mars, I got to tell you, so there's a bit of a lag.
The latest issue of your Hat Trick letter is out. Can you tell us about it and how our listeners can subscribe?
Yeah, this month was quite interesting. I have a brief section on precious metals because they're in a consolidation mode. The big issue right now is the war in Israel and Iran, and we got some questions about that, but let me just make a comment about really good investments, because paper money is it's suffering a massive decay in the last 2 or 3 years. Decay. Not a collapse, just a decay. I like silver. I actually like it more than gold, and I've liked it more than gold for a long time. We don't have quite as much a gain in the last 2 years with silver as we do gold, but I think we're going to have some rather substantial gains in the near future because everything is breaking with respect to silver, and Mexico is, I think, forming a cartel with China without using the word cartel. I have an interesting chapter this month on XRP, and I believe that some of the troubles that are coming with respect to the Treasury bond are going to work directly into XRP's favor. So, I do have a summary of the war in the report, but, mine is not a war correspondent newsletter. I'm financial, economic, banking, currency, gold, and, the metals. So I have a summary of a number of different angles regarding the war, and we're going to cover some of that as we proceed here.
You do consulting sessions for a fee. Can you tell us about them and how our listeners can subscribe to that?
There's a consult button, and it's next to the donate button and the sponsor button, but the consult button is very special. It gives people an opportunity to have an extended phone call with me, and we've been doing some with Zoom video calls, and they're really quite enjoyable. I got to say, and this is a remarkable statistic. I've had 5.5 years now of doing consults, and I've done a little over 800 of them. 800. So they serve a purpose, obviously, for the clients. If you assume that what I have to say is worth the time, but I also benefit. I'd say maybe 1 out of every 15 calls is some serious boots on the ground intel from the clients, like with respect to banks or Los Angeles Underground, a number of different things. With respect, I had one lady who got shot by darts. They're drones that are shooting darts at people, and they're targeting people. And the darts are tiny chips with poison and other elements. We're under attack. I mean, people better really wake up. We're under attack. We had the pandemic with the vaccine to do tremendous harm, killed millions of people, and for everyone that was killed, there were about 4 or 5 that were seriously injured to the point where they couldn't continue working. Then we had the election fraud, and then we had the lockdown, which destroyed businesses, in particular small businesses. And then we had the fires, and none of them are natural. Anyone who thinks the fires are natural is, I think, a grade A moron. They're not really aware of the technology. And so many people are not really interested in the technology. Well, they should, because the technology is rather advanced. Anyway, the consults are special. They provide me boots-on-the-ground information at times, and I I just did one a couple days ago. Really nice couple. See, where are they from? Pennsylvania. Really nice couple. They're in Penn State territory, Penn State University territory, and nice people. All right. When I say all right, I mean next.
Why did Russia go into Ukraine in the first place?
This is actually more complex than even some patriots realize. I believe it was late 2021. Many different ports were told by the shipping companies, like the South Korean exporters or Japanese exporters, we don't want your treasury bills. Okay, that was late 2021. And that prompted the U.S. to do something in order to alleviate the pressure on the treasuries in general, but in particular at the port facilities. So I believe that a sequence of events began where NATO made an announcement that they were going to annex or invite Ukraine, which was a part of the Soviet Union. Imagine what would happen if Florida or Texas or Virginia were annexed by the Russians. That'd be holy hell. Well, that's what NATO did. And by the way, NATO was originally staffed by Nazi German generals. We didn't win the war, okay? We didn't. We didn't win the Vietnam War. We didn't win World War II. We invited all the Nazis to occupy the United States. Anyway, NATO was originally staffed by Nazi Wehrmacht generals. So NATO invited Ukraine to join their alliance. At the same time, just to make sure everything got really hot and heavy fast, the Ukraine government, which was set up by a coup d'etat by Hillary and the Mossad back in 2015 called the Maidan coup, the Ukrainian government decided, let's go murder and do ethnic cleansing in the eastern oblasts, the eastern provinces, if you will. So they began murdering anybody who speaks German. I'm sorry, anyone who speaks Russian. So ethnic cleansing and invitation to NATO sparked the war. And that's why Russia went into Ukraine. Originally, I did not call it a war. For several months, I called it an operation. They were looking to prevent the Azov Nazis, sponsored by the Ukraine government, with Nazi swastikas everywhere, but not in the U.S. news, not in the Western European news. Everywhere, Nazi swastikas and murders and ethnic cleansing and just wanton murder, including people over the age of 50 and 60. They were just slitting their throats, tossing them over balconies, and that got the Russians into the battle zone. Okay.
What role do you think NATO is playing in the Russia-Ukraine conflict?
They're running it. They're running the entire thing. They're running the entire war. This is a NATO war against Russia. It's the Atlanticists. These Atlanticists have a theory, and they've been espousing this and lusting for this for 20, 30, 40 years. They want to take over Russia, divide it up, and have regions governed by Germany, region by Italy, region by Netherlands, region by France, region by Belgium. There's no more cockeyed, insane, lunatic concept than the Atlanticist desire and plan. So, NATO has a war with Russia, and they're playing it out in Ukraine. And they're trying to play it out in the western part of Russia. And they've started a little bit. It's very limited. Russia is eventually going to take over the entire country of Ukraine.
What are your intel sources saying on the Russia-Ukraine conflict?
They're not actually saying a lot. They're talking more about Iran, but I will tell you some of the things that I've heard. They verified, the military sources verified, it was about a year ago, and it was 20 stories below ground in a suburb of Kiev, and a NATO command center was destroyed by a hypersonic missile, or maybe two at the same site. The first breaks down the fortifications, and the second one destroys the command center. And a number of NATO officials were killed. The military sources mention from time to time what is going on underground in Ukraine. And there are blood harvesting centers for adrenochrome. There are child trafficking. The Israelis have been identified now by the Russians as running child trafficking in Ukraine. I don't like to get into those details anymore. I'm going to try to leave that topic alone, but the military sources confirm like 8 different types of trafficking. Those that I mentioned, but narcotics, amphetamines, bioweapons, human organs, white women, and obviously kids. They offer a discount on the price of kids in Ukraine, by the way. A nice $20,000, $30,000 discount because they got so many. I did one client consult, and the guy said, Jim, I've got a girlfriend, and her best friend is a woman from Ukraine, and she is from Mariupol. And she said kids go missing in Mariupol all the time. Hundreds and hundreds. Mariupol, that's in the eastern part of Ukraine. NATO is in charge of this, and NATO will lose this. And I think, I'm not sure that my intel sources agree with this, but I believe NATO eventually is going to be dissolved because they're going to lose their money laundering income. It's going to get cut off.
Why did Israel bomb Iran in the first place?
Well, there's a reason they state, and there's a reason they don't. And usually, I'd say since World War II, almost no war has been described correctly as for its motive. Not a single war, including Vietnam. I almost went to Vietnam. I turned 18 in the last year of that war, so I was pretty lucky. But Israel attacked Iran, according to my military sources, which is very much in sync with my own thinking and my own research and my own, colleagues and the information we drum up. It was to halt. There are 2 motives, and one they talk about, one they don't. The one they talk about is to halt the nuclear refinement industry. They have rather extensive, and they're underground, by the way. They're not sitting on the surface waiting to be destroyed like morons. They're underground. They're like 10 stories, 20 stories underground. So any claim that they've been destroyed by aerial missiles is likely to be a bunch of bullshit. So they talk about limiting the Iranian nuclear potential, because if they're doing refining, that means that a lot of people don't understand this, but it's the heavy isotopes of uranium that are unstable and are subject to fission, breaking them. And they're used, that uranium supply is used in peaceful nuclear reactors. But the West, including the U.S. and Israel, concluded that their output, and I don't know how they understand their total output, unless they have spies on the ground. They said their output far exceeded they call them nukes, a nuclear plant, nuclear generating electric plant, a nuke plant, nuke generator. So that's the one reason. But there's another reason I'm told about by the military sources, and that is that Iran maintains a rather extensive database, and it's a fraction of the Epstein database, a fraction. But it's still rather effective and powerful, and it's used more for sabotage and assassination than it is inside the United States, than it is for extortion and control of political policy, like the Epstein file is. Epstein is about military control, political control, and Iran's database is about assassinations, sleeper cells, and industrial espionage to some extent. All right, so I think there's going to be, you have more questions on this. All right, that's fine. Why don't you go to the next question before I jump into that kind of an answer?
Do you think Iran's nuclear sites were destroyed?
No, but the press has to say it was because it was such a big effort. What are they going to do? Get on MSM News and say the United States supplied $30 to $40 billion in weaponry to Israel and it was all a failure? It didn't work? There are 7 different nuclear underground facilities and only 1 or 2 was partially damaged? You think they're going to say that? No, they say that they're destroyed. And the private intel inside, military rooms and between the walls is, we didn't get it. Okay, it's not easy to destroy something that's 20 stories underground. How do you do that? If you got a good answer, pass it on. Because a hypersonic missile will do a lot of damage 5 to 10 stories down. And then you need another one to go deeper. And that's what the Russians were doing outside Kiev several months ago. I think their nuclear sites were moved. I mean, they had good warning. Trump gave them good warning, said we're going to give you like 30 days to make a decision. So they moved some of them. I don't think many nuclear refinement facilities were harmed. That's my opinion. Okay.
What intel are you hearing about the Israel-Iran conflict and what is likely to happen going forward?
The short war will end soon, and it will prevent a bigger, wider war involving more countries. There's a concept in forest fire fighting. It's called building a firewall. And they borrowed the term in the computer technology for anti-hacking purposes. But a firewall, I'll give you an example. There might be a raging fire in northern Colorado, and it's moving west. So near the border, they make about a 200-meter wide column, and it goes up for about a mile or more, and they burn it, and they control it so it doesn't spread. So when the big fire comes and meets that line, it stops. It's called a firewall. Fire line, firewall, they got a number name, but I call it a firewall. I believe this war is a design war to be limited, and let me just say what I believe the motive is. The motive is to eliminate the Epstein file databases and the Iranian databases, and the public story is to eliminate the nuclear refinement facilities.
Depending on what happens with these conflicts, could the price of crude become volatile?
Yeah, it was very volatile on the downside on June 23. It went down 11%, and I put that in the report that was posted a few days ago for June, the June report. I said, this is the market confirming we will not have a wider war. We will not have the Hormuz Strait sabotaged. There's talk. There's a lot more talk than there is action. I think it's like 5-to-1 ratio of bullshit to actual reality. There's talk that Iran is going to sabotage with mines the Hormuz Strait. By the way, it's 22 miles wide. I mean, people need to wake up. A lot of Americans think it's like a few hundred meters wide. I've talked to some, and they say, isn't it easy? Isn't it easy? You just jam it up? It's 22 miles wide. Imagine 22 22 Mississippi rivers. 22! Okay, the Mississippi is a mile wide. I don't think China will allow Iran, their big trade partner and oil supplier and LNG supplier, natural gas, China will not permit Iran to sabotage the Hormuz Straits. That was a rather fortuitous and pleasant surprise that China delivered. If the Hormuz Strait is sabotaged and obstructed, we're going to see a $20, $30 increase in the price of oil. We're going to see a big drop in supply, and we're going to see China hopping mad for losing supply. And, China's the mouthpiece of the Pacific Rim Asian coast. Whatever happens to China with oil supply cutoff, it also happens to Japan and to Korea. They all depend on Mideast oil. China's the one with the big mouth. Japan's not going to say anything. So China comes out and talks, and Japan does all their actions quietly. This is going to, I think, have a quick and sudden end. I don't know how long it'll be, but I don't think it's going to be like 4 or 5 months. I really don't. As wars go, if it's 3, 4, 5 months, that's rather short. Look at the Ukraine war. It's now in the 3rd year or more.
Are these conflicts likely to affect the price of gold?
You know, when I was doing the gold chapter for the June report, it's exactly the question I had to answer. And my conclusion is that it has an effect, yeah, but not to lift, because we've already had a big lift. We've had a substantial move from 25 and 2,700 up to 32 and 3,300, and it's rather stable there. So what has happened with the gold price in response to conflicts? It's gone sideways. It's gone sideways and is buying time. It has become stable. We did not get a pullback. Because of the war, we did not get a pullback. And we might not, because it's meeting up with the moving averages right now. So what I concluded was we're going to go sideways for a little while, and then we're going to meet the moving averages and struggle with them, because when that usually happens, the price goes up. So we're going to struggle with the desire to go up and the tendency to go up, and it might continue sideways a little more until, for instance, I don't know, the U.S. government announces a couple more months of gigantic deficits, despite all the hokum that President Trump spouts about a great economy. If we have a great economy, we wouldn't have such big deficits.
Do you think silver could be a safe haven play going forward?
Yeah, in fact, silver is doing the same thing. It's going sideways. It stayed above 34, 35. Now, remember a few months ago, the big battle was we just can't get above 34, 35. We can't get above 34 and a half and stay there. We can't do it. This is not working. How many times have we hit 34 and come back? We've been over 34 and a half now the entire month of June, and now 3 days, or the two. What day is today? Today is the 3rd, so we're at the 4th day, counting the end of June. 3 full days of July. All right, we got almost 5 weeks now where we've been above 34 and a half. I think the war guaranteed no pullback. Same thing. We could have gone back and revisited 33 and 32 and bounced back up quickly to get above 34. No, we never went below 34 and 34 and a half. We didn't go below that. And that was very good news. And it causes damage, deep damage to the players who are leveraged, because they get a time limit. They're told, you got 3 days. And others with more structured, they get a little more time when they have structured leveraged investments. They run out of time. And that's exactly what's going on right now. We're buying time, going sideways. I love the flat line. I love how silver is flat and not volatile. I love it. Let it continue moving in time and hit the moving averages, which are all rising. And then we'll have a tendency and pressure to go up again. And I think silver this time, it's going to go up from limited supply out of Mexico. If you add to Mexico, Ecuador, Chile, and Peru, and Argentina, you add them together, you got 58% of global silver supply, and China is lapping almost all of it. All of it. Almost. And they're doing it in the form of concentrated ore. They're going straight to the miners and say, give us your concentrated ore, which, by the way, is like 90, 92, 94%. I just think of it as 90% or better silver. And there's junk in there. It's not pure. So they take it and they go straight to the refinery. China is buying concentrated ore from the Andes region, including Mexico. And Mexico is limiting exports, except to China. Mexico is gradually turning communist. Now, one of the freakish phenomena in the West right now is that countries are turning communist without ever using the word communist. They're calling it liberal. They're calling it ultra-liberal. They're calling it, national security measures. Mexico is about to shut down exports of silver for national security reasons in order to take care of their own, and all of their descriptions are parallel with communism. Mexico. All right, that's what I think is going to take silver to $50 before the end of the year. Now, I remind people, in March and April, I said we're going to get above 35 and try to make a move to 50. We got above 35 and we got stalled, and I found out why. The big players just bought more time by pushing out their shorts into September. I think September is going to be a time when they have a great deal of difficulty continuing in pushing it out. I think we're going to probably break 40 in September, and that's only 2 months away. It's very exciting. I think the next big gains are going to be silver, not gold. But gold is often regarded to be the anti-war hedge. This time I think it's going to be the anti-U.S. dollar, U.S. Treasury bond crisis hedge. I think we're moving headlong into a U.S. Treasury bond crisis.
The U.S. dollar is seeing new lows not seen since early 2022 as a lower U.S. dollar good for trade and interest rates.
Well, we have to be more specific. The dollar is seeing more lows. How? What? The dollar index, the USDX, is seeing more lows. Well, what is that? Well, that's an index based on toilet paper. It's got a 52% weight on the euro toilet paper. It's got something like a 10% weight on the British pound toilet paper. It has a weight against the yen, which is not toilet paper, but it's severely harmed. So the dollar might go down versus toilet paper. Who gives a shit? Okay, if the dollar goes down versus the euro, that means that Trump's economy can do some exports to Europe. Are they in any position to import? Or are they too busy with the Ukraine war, the Russian sanctions, and declaring nitrogen as a pollutant? Like morons! Europe is not going to do a great deal of importing with a cheaper dollar. Okay, this is a ruse. The dollar is seeing new lows versus gold, the supercurrency. The dollar is seeing new lows versus a purchasing power index for buying food, for paying insurance, paying your utilities, buying materials for a room addition when your little kid grows up. Is the dollar decline as little as it is? Okay, they make a lot of news out of really tiny movement down versus the toilet paper Forex index. Is the dollar decline good for interest rates? I don't know. I don't think it's really related to interest rates. The interest rates are really, I think, a function of, I think they're a function of the U.S. government debt. Powell is now being urged by Trump to resign. The Fed Chairman Jerome Powell. Trump wants him to lower interest rates. I'm sick of this crap. I'm going to threaten to dissolve the Federal Reserve. I want lower interest rates. Well, I think Powell is actually a little more prudent and responsible for saying, no, you haven't reduced the deficits. You got a $36, $37, $38 trillion deficit. The interest borrowing costs for the debt now exceed the military budget. It's over $1 trillion a year. You don't lower interest rates in that environment. And I made a forecast, Jim. I made it a year ago. I said if they lower interest rates, you're going to see the long end go up in interest rates for expected inflation. And we got that. Maybe not for that reason, but we got higher interest rates. There's a lot of moving parts here. I don't really believe the dollar index can go down a lot, because if it does, it'll bring about a global depression because they own treasury bonds. We exported toxic paper. If it goes down in value, it wrecks the countries holding it. This is not complicated.
The S&P 500 and NASDAQ have hit new all-time highs again. The Dow looks to be picking up steam, heading towards new highs as well. Do you think the stock market see an end to the Iran, Israel, and Russia-Ukraine conflicts?
I think they see an end to the Iranian war. I don't think the Ukraine situation factors in at all. That's just my opinion. I think that the stock market is expecting a rate cut. They're also expecting, I think, some substantial foreign investment following through on the trade talks and all the pledges that have amounted to at least $2 or $3 trillion. Remember always that the stock market can benefit from funny money coming out of thin air, investing in the financial markets. Notice that Del Monte, a 140-year-old company, declared bankruptcy this week. Del Monte, food company, canned goods. The economy is not doing well. The financial markets are rising because of funny money and an expectation, I believe, of a rate cut, which I think would be a wrong move.
Could strength in copper be signaling something to do with the Iran, Israel, and Russia-Ukraine conflicts?
I don't think so. I don't have a strong opinion on copper, but let me just say this. Gold and silver are up, and copper has been lagging. Platinum is making good new highs, so hey, let's invest in copper. It may not last, but remember, if we get movement on the several $1 trillion of pledged trade, trade talk pledges, a lot of copper is going to be used because some of it is pledged for AI centers and electric generating centers, data centers. That's a lot of copper. So it could be an AI and data center play. Copper generally is considered to have a doctorate, a PhD in economics, and I buy into that. But this time around, I don't think it's an economic indicator. I think it's a sector indicator. But it could be just like, as I said, platinum is way up. Hey, let's pull up copper. Where are the contracts? Where's the economic growth?
Rare earths seem to be a concern. Are there solutions for the supply issues?
Not really, except relaxed trade conflict. China's a big exporter. Okay, let's just assume that Greenland has some. How many years before the supply hits? 3? 4 years? Okay, Russia has pledged that if the United States supports their peace movement and it's successful, Russia will supply a boatload of rare earth metals. So that's a supply solution. we got to work with Russia to end the Ukraine war. And I got to add something in regard to the Iranian-Israel war that I didn't mention before. My military sources have said, and there's not 3 or 4 of them, it's 1 or 2 regarding this point. Russia gave Trump a free hand to fix the Middle East, and I think that's to get rid of databases for Epstein and Iran extortion and control. And in return, Trump is going to support Putin in Ukraine. So if that happens, rare earth supply is going to be plentiful and China might get cut out. Forget Greenland. That's a future thought.
Could Bitcoin be a safe haven? And if it is, why?
I think Bitcoin is probably going to do rather well, but others are going to do better in the digital finance area, like XRP, XLM, maybe even XDC, which is going to be the financial market, stock and bond transaction coin, XDC. I think Bitcoin is going to have a sell-off maybe later this year, and the beneficiary is going to be XRP. I'm expecting some. I don't want to get into a long answer on this, but let me just say that there's been a lot of Treasury bond sales, and XRP, I'm sorry, I didn't mean that. At USD Tether has been the beneficiary of that, and it doesn't go up in value. It goes up in volume. Well, it's got volume like a tick full of blood on the jaw of a dog that has come out of the forest. I think USD Tether, the stable coin for the dollar, is going to shed a lot of volume. It's not going to shed price. It can't. It's a stable coin. It's going to shed a lot of volume, and so is Bitcoin, because they use Bitcoin to create the USD Tether. A hidden weird phenomenon now is that Bitcoin is remaining elevated in order to keep the supply of Tether strong, in order to protect the U.S. Treasury complex, because foreign nations like the BRICS are selling treasuries. I don't like Bitcoin all that much. I like XRP. And if you sign up for the newsletter, you'll see an entire chapter where I justify why XRP is going to go up multiples in the next several months.
In a post on X this week, General Mike Flynn suggested President Trump should dissolve the Federal Reserve immediately for national security reasons alone. Your thoughts?
Oh, boy. I don't have much an opinion on that. Trump came out yesterday and said that Jerome Powell, the head of the Fed, chairman of the Fed, should resign. Well, there's a big battle going on. I think the Fed doesn't want to lower interest rates as long as the U.S. government deficit is bloated and continues to get bigger. Trump wants it for economic stimulus to lower price inflation, and that's noble, but we haven't fixed the debt problem. How would it be if Trump says, we'd like you to lower the interest rates, and we're going to bring in sufficient amount of gold to cover $10 trillion in the debt? Let me repeat that. How would it be if Fed Chairman Powell were urged to lower interest rates if Trump brought in $10 trillion worth of gold to cover 2/3 or more, or almost 2/3 of the debt? That's how you get traction. And I think there's a lot of gold out there waiting to come into the game, and we're not ready yet because we still got a stranglehold of the cabal. So, hey, nice idea, Mike Flynn, but you can't do that in a vacuum.
Canada's new Prime Minister, Mark Carney, has been in office for just over 2 months. In a conversation with Mark Carney, President Trump said, "Speak to you after the election," like somehow Trump knew Carney would win. This was posted online. Would like your thoughts. Trump installed Carney to liquidate the bankrupt corruption of Canada. Soon the announcement that Canada has been annexed will happen.
I think Trump knew Carney would win because they rigged the election, not because of any inside word. But there might have been some inside word that they were going to rig the election. Remember, it was just, I think, a month ago that we heard the fake King Charles, who replaced the dead Prince Charles, announced that Canada had no legal rights to their own territory. That's the big issue, in my opinion. I don't have a lot of good information, and I can't really speak too much about the bankrupt corporation of Canada, except that the western provinces are in revolt, except for British Columbia, of course, because that's a colony of China. So I don't really know.
Prime Minister Carney and his Liberals just passed Bill C-5, also known as the One Canadian Economy Act. Could this be by design to make Canada into one state, the 51st state?
I think it's more to bring into the fold the western provinces that are full of minerals and energy deposits. I don't think it's for the 51st state. If there is an annexation and it's the United States of North America, I think that's a couple of years off. Right now, the problem in Canada is that Saskatchewan and Alberta are in revolt. That's the problem. So any bill like this, I think, is to address that revolt and eliminate it.
Real estate markets are turning down. Could real estate turning down be tied to an economic reset?
Oh, maybe. I think it's going to be, I got to say something. 2 years ago, we had a commercial real estate crash. Why are they saying that the real estate market is in trouble now? It's been in trouble for 3 years. So this maybe is round two in a decline of a very serious nature in the real estate market. We've had residential problems for at least the last 2 years. I know two people, one in Texas and one elsewhere, and they're unable to sell their property, and it's a nice property, even after a 30% price reduction. This is not a new real estate problem and a decline. This has been going on since 2022. We have a real estate crash. We had banks refusing to roll over 7-year commercial mortgages. We had high-rise buildings being confiscated, the keys handed over. That's the phrase. You hand the keys over and the title. You can't get a new mortgage. You ran out of time. I know someone who has a good friend who lost $25 million that way. 4-way partnership, a property in northern Midwest in the United States. This is not new. Maybe they will claim that the real estate market's in trouble. We need to lower interest rates to revive it. Maybe that'll be like the pretext. Remember, almost no policy is for what they say. Almost no war is for what they say. Because they don't want the people to get all worked up, and they don't want the people to know what the hell is going on, because most of the people never know what's going on.
If you lived in Canada, would you move to another country or stay and fight?
I'd move out immediately. Not just for political reasons, but for weather reasons. And, let's face it, Vancouver's lovely, and it doesn't have a harsh winter. Toronto is wonderful, but it gets really cold and windy, and I'm not sure I'd like to live there, even though it's a great city, and it's changing demographically. I've got a couple clients who say, Toronto's really changed. If you walk down the street in the main business areas, you're likely to see only half of the people with white faces. And if you walk down the street in Vancouver, what percentage have Asian faces? Okay, Canada is in trouble. I wouldn't want to stick around. When they came down hard on the truckers' convoy and stole all the money, to me, that's time to get out. They stole all the people's donations to the truckers on the convoy. Get out. I have no time for the Canadian government. I have no idea why there isn't revolt on the Ottawa Parliament. Why are the Royal Canadian Mounted Police not doing anything? How much money is the Chinese Communist Party paying them? Why is there nothing in the news? Oh, I'm sorry. The news is conquered by the Chinese and the Parliament. I tell you, we need to turn this around. I've got to be careful with my words. By controlling some press and controlling, in the United States, there are about 7 or 8 of them. Take one, like CNN. Take it. Charge the VPs with sedition. Take it. force a divestiture. Take CNN. Make it a truth network and destroy the other networks. Unfortunately, in Canada, I think you've got just one network. I'm not sure about that.
Where can our listeners subscribe to your hat trick letter and reach out for you for a consult?
It's www.golden-jackass.com. And I got to say, I finished the 21st year in April, so I'm into my 22nd year. And let me admit some things that are very personal. I enjoy the work. When I get going on writing the report, I'm immersed. I lose a sense of time. Hours go by. It's a labor of love. And I know that there's a certain friend of mine in Texas who disagrees with that. She said, no, you're paid. I don't care. It's a labor of love in which I get paid. Now, maybe that's a contradiction in terms. I don't give a crap. I love the work. I love the promotion. I love the consults. What I don't like is the attacks that I get because I'm exposing fraud. I'm exposing criminal activity. I'm exposing trafficking. I'm exposing the battle of good and God versus evil and Satan. And I'm being attacked. And it's wearing me down. And I continue. And I thank everybody for hitting the donate button and helping me out. Because I need help. I've had more events in the last 60 days that are painful. And they're car crash deaths. I've had 6 car crash deaths since 2017. None before that. Okay, this is very, very unusual. These are 3 Sigma events. I love the work. I want to continue the work. I'm having a hard time from all the attacks. They're 3 Sigma events. They're evil. They're demonic. They're occult, deep forces. And for those who don't understand that, maybe it's best you don't. But if you do, help me out. And if you're sitting on the fence, maybe you tell yourself and convince yourself that deep, dark, occult, powerful forces don't exist, and you're dead wrong and possibly a coward looking into the mirror. Okay, golden-jackass.com. Sign up for the newsletter. You don't have to read the whole thing. Read the chapters you enjoy. And go back to it in a week. Read some others. So what? Read the whole thing. Don't read the whole thing. Who cares? Sign up for a consult. I've got available time. Hit the donate button if you don't like reading and you'd rather just watch and listen to podcasts and support my work with donations. I got several people who are making regular ones, and I'm not on Patreon, so it depends on them. And if you're wealthy and you love what I'm doing and you want to support me and make sure I stay strong, hit the sponsor button, which is for 4 figures. And believe me, people do. So join them. Thanks for having me on, Jim. It's always good. I like the format. It flows. And thanks a bunch.
My guest has been Jim Willie, editor of the Hat Trick Letter online at golden-jackass.com. Jim, thanks for being on This Week in Money. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, John Rubino, Martin Straith, and Jim Willie. And thank you for listening. If you have any questions for the show or for our guests, you can send them to info@howstreet.com. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at TalkDigitalNetwork.com. This Week in Money is a production of Howe Street Media Incorporated. Executive producer is Tom Allen.